Stop scrolling and look at this timestamp. 10 minutes ago, I asked for $50,000, and now it is sitting in my account. The money is real, the offer is real, and no, I didn't go sit in a bank lobby in a suit and tie begging some loan officer for mercy. I did this from my couch with zero paperwork. Here's the game the banks are hiding from you. They are borrowing money from the Fed at around 3.6%, while they keep you trapped fighting credit card debt at 20% APR. They pretend they're doing you a favor, but with inflation keeping your grocery bill and rent sky high, the math is completely stacked against you. That is why this isn't just a loan tutorial, it's a loophole. I'm going to show you exactly how this LightStream move works, specifically what boxes you need to check to skip the manual review for an instant approval, and how to use this cash to beat the banks at their own game without ruining your financial future. I'm MD Tanvir. Welcome to Business Geek. I look at the numbers so you don't have to panic. If you're tired of the system playing games with your wallet, subscribe and hit the thumbs up. Most channels tell you to cut Netflix and drink less coffee. I'm telling you the truth. With the Fed funds rate where it is, inflation where it is, and lenders still squeezing you on the spread, you cannot coupon clip your way out of this. You either learn how to use leverage correctly or you stay stuck in minimum payment hell. So let's break down what actually happened here. LightStream is an online lender that gives unsecured personal loans. No collateral, no home equity line, just your credit and income up to around $100,000 if you're in that good to excellent credit zone. They're known for moving fast. If your profile fits their model, approvals can come back in minutes. And in a lot of cases, they can fund the same day if you sign your documents by their cutoff, often around mid-afternoon Eastern Time. That speed is not luck. It means their system looked at my file and went, okay, this guy fits the box. Here's the first thing you need to understand. This is not free money. This is a tool. If you treat it like a lottery win, you will blow yourself up. The reason a $50,000 LightStream loan can be a hack is simple math. Let's say you're sitting on $40,000 in credit card debt at 24% APR. That's $9,600 a year in interest, about $800 every single month just to tread water. If you take out a personal loan at, say, 12% APR over 5 years, numbers will vary depending on your credit, this is just a clean example, you're now paying around $6,000 in interest in year 1 on the full $50K, instead of almost $10,000 on $40K. You wipe out the cards with one move and convert chaotic revolving debt into a fixed payment with an end date. That's the game. Now let's talk about what actually triggered the fast approval. LightStream doesn't advertise this as a hack, but if you read the fine print and look at what reviewers say, patterns show up. First, loan purpose matters. LightStream lets you select from different purposes: debt consolidation, auto-related expenses, home improvement, medical, and more. And rates and underwriting behavior can vary by category. Some purposes historically default less, so they're more comfortable and may give sharper terms. You do not lie on the application, but you don't be sloppy either. You pick the purpose that truthfully matches what you're doing and also lives in a category they actually like. Second, your credit profile cannot be trash. This is not a solution for 580 scores and recent charge-offs. You're generally looking at good to excellent credit, with many reviews pointing at a FICO in the mid-600s to 700s or better as the realistic range, and around 680 plus being where things start to get smoother. They want multiple years of history, on-time payments, and a mix of accounts. If your report shows late payments in the last year or you're maxed out on every card, don't expect a 10-minute miracle. Expect a denial or a request for more documentation. Third, income and debt-to-income ratio. This is where a lot of people get cute and kill their own approval. LightStream and marketplaces that show their offers note that you're more likely to qualify if you're at least in that $45,000 annual income zone. And realistically, the more income and the less existing debt, the better. They're looking at your monthly obligations compared to your gross income and asking, can this person realistically make another payment every month without imploding? If your current payments already chew up almost all your income, a big unsecured loan is going to make them nervous. Fourth, the part nobody talks about, consistency. The fastest approvals happen when the system doesn't hit any weird friction. That means your name, address, and employment information match what shows up on your credit file. Your bank account details are legit. Your income you type in isn't some fantasy number that doesn't match your lifestyle on paper. If you tell them you make $200,000, but your credit report looks like someone making $55K with no assets, their system is not going to rubber stamp that. It'll either go into manual review or just say no. Now, if you're watching this, here's what the actual walkthrough looked like. I went to LightStream's application page, I picked my loan amount, $50,000, and I selected a purpose that actually matched what I planned to do with the money, inside their allowed categories. The next screen showed example terms, different repayment periods, different monthly payments, different rates. Shorter term, higher payment, less total interest. Longer term, lower payment, more interest over time. I chose a term where the payment was aggressive enough that I'm forced to pay this off, but not so high that one bad month sends me into a spiral. Then I entered the personal information. Full legal name, address, social, employment status, employer, and income. I did not round up my income into delusion. I put what I can actually back up with pay stubs or tax returns. Then I put in the details about my housing payment and debts. That's the part where your story has to make sense. If you say you have no debts when your credit report shows multiple active accounts, they're going to see that instantly. Finally, I put in my banking information, so they know where to send the money if approved. For them, this is risk and logistics. Are you a real person tied to a real bank account in your name that can actually receive electronic funds? After that, I hit submit and walked away. About 10 minutes later, I came back to an approval message. Amount, rate, term, estimated monthly payment, and a note that if I sign the loan documents by their same-day funding cutoff, the money can land in my account as soon as that day. Here's the part you will not hear in a hype TikTok. This does not make you rich. This just changes the structure of your problem. If you take the $50K, pay off your high-interest cards, and then go right back to swiping them like nothing happened, you've just created a bigger, nastier problem. Now you've got a big fixed loan plus new card balances. That's how people go from stressed to completely wrecked. Psychology is the real battlefield here. You're fighting loss aversion, so paying off cards feels like losing the safety net of available credit, even though it's killing you. You're fighting hyperbolic discounting, so the future pain of being locked into a huge monthly payment feels less real than the instant relief of seeing your cards go to zero. If you don't address those two things, no LightStream hack can save you. So who is this actually for? This is for the person who can check a few boxes. You have good credit, again, realistically mid-600s and up with a stronger shot around 680 plus, and clean payment history. You have stable income, W-2 or 1099, but consistent, and your debt to income is not already maxed out. You're not behind on every bill. For that person, a lower rate fixed-term personal loan can be an actual lifeline. You consolidate, you cut up or freeze the cards, you stick to the payment, and you're out in a known number of months. If that's not you, if your score is in the low 600s or worse, you've got recent lates, you're juggling collection calls, then this is not a shortcut. For you, the hack is a 12 to 18 month rebuild plan. Clean up errors on your credit report, get everything current, lower your utilization as much as you can, and build a track record of on-time payments. Then you can think about leverage. Jumping straight to a $50,000 unsecured loan when you're already sinking is not a strategy, it's a panic move. Let's get even more concrete. If you're considering something like this tonight, literally after this video, pull out your statements and do the math. What is your total credit card balance? What's the weighted average APR? What are you actually paying in interest every month? If your blended APR is way above the kind of personal loan rates LightStream and similar lenders are offering to people in your score range, then at least you know you're bleeding more than you should be. That doesn't mean you instantly apply, it means now you're evaluating like a rational player, not a panicked victim. Next, look at your utilization. If you've got multiple cards over 50% used, that's killing your score, which is killing your rates, which is killing your options. If you can pay any of those down even a bit before applying, that may buy you a better offer. Clean up your reports, get rid of any obvious errors. Make sure the story on paper is as strong as it can be before you hit submit. And the most important mindset shift, if you use a move like this, the money is not for feeling rich. It's for either damage control or income. Damage control means killing high-interest debt. Income means putting capital into something that has a real, measurable path to cash flow, an asset for a business that's already selling, a necessary investment that directly boosts your earning power, or a project that actually moves your revenue line. Not a truck you might use for a business someday, not a vacation because I deserve it after all this stress. Let's also be real about the bigger picture. The effective federal funds rate is 3.64%, down from over 4.3% a year ago. So banks' cost of money is easing. Inflation is 2.7%. The average 30-year mortgage is still north of 6%. That spread between what money costs them and what they charge you, that's the game. A $50,000 LightStream loan approved in 10 minutes is just one glimpse behind the curtain. If your file fits, they're happy to extend credit because over the life of the loan, the numbers work for them. Your job is to bend that math so some of it finally works for you. So here's your assignment. Stop thinking in terms of, can I get approved for $50K? And start thinking, if I did get approved, can I handle it without wrecking myself? Run your numbers. Be brutally honest about your habits. If you're in the zone where a structured, lower-rate personal loan could get you out of revolving debt prison, and you trust yourself not to reload the cards, then yeah, a LightStream-style hack might be that turning point. If not, your hack right now is discipline, cleanup, and income growth, not more leverage. If this kind of no BS breakdown helps you breathe a little and think a lot clearer, hit like, subscribe to Business Geek, and drop a comment with where your credit score is and what your biggest choke point is right now. Income, debt, or discipline. No judgment, just data.